Hi, and thanks for watching. In this video, we're going to do a monthly portfolio update for the month ending June 2025. So my name is Tyler Stokes from StokesTrades.com. I am on a journey to become a full-time trader. April 2025, we started this trading challenge where I'm trading real money, and I have been doing these monthly updates to just kind of give a rundown of my portfolio and sort of help me stay accountable to the strategy that I am using. Now, below this video, you can find a link to our day trading community here on Skool. And within the Skool classroom section under Trading Challenge, I've actually documented all of my trades and my entries with screenshots and a little description. So we're going to go over the numbers today, but if you'd like to come and join this group, you can stay updated with all the trades that I make. And they've pretty much been in real time. When I make the trade, either that day, I try to make a post where I sort of explain my entry and explain some of my exits as well. So you can come and join that group below this video. Okay, so for June, we are up 40%. So we started trading in April. April, we were sort of getting some positions. We had just a 3% gain in that month. A lot of my positions were sort of bought near the end of April. So, we had some good timing with this challenge because, I had some money on the side that I was using for this trading challenge. And, April, we saw a bunch of lows. And although, hindsight's 2020, when things kind of crash like that, there's always opportunities. Many stocks have, doubled since the lows in April. So it was a good time to start the challenge. But it wasn't until the end of April we got some 20% of my funds sort of in there. And then May, we were up 20%. And now at June, we were up 40%. And I have actually, at the end of June, a 0% cash position. So I am fully invested at the end of June. Actually, today is July 4th. Thursday, I made some sales. So I'm back to a 5% cash position, but pretty much fully in with the stocks that we have here. So we'll break some of them down. I thought I'd talk a little bit about some mistakes that I've made and some stocks that have gone well for me up until this point. But we can see that the portfolio gains as of June 30th were 41.2%. So for me to get that number, I put all my trades manually in the trading journal Trader Sync. And then I just close out my positions, and that is the gain that I have. In the future, I would maybe do this a bit differently. I've got these funds in a brokerage account with other funds and other investments. So I'm not able to see a perfect breakdown in my brokerage. I've had to sort of manually put them in Trader Sync, but that's been okay and been helpful. A part of this challenge was to see that if I trade starting April, could I get a better outcome at the end of the year rather than just investing in Tesla? So in the beginning, Tesla's done well. On April 7th, when we started this journey, Tesla was 223. It's up to 317 at the end of June, up 42%. And we are currently up about 41%. So we're basically right in line with Tesla, and we will see how that progresses over the year into the end of 2025. Now, in terms of allocations, here in this spreadsheet, these allocations are just rough estimates. They're not exact. And again, I can't see a perfect breakdown in my brokerage, but below this information at the bottom of this page, and again, you'll find links to this below, I've actually got Grok to analyze my numbers, and it gives me a allocation percentage based on the new value of the portfolio. So before, I've been going by my entries because this strategy requires me to just invest a max 10% in a particular stock. But here now it breaks down the allocation value based on the new value of the portfolio. So what I thought we would do is kind of go over some of the stocks that are doing well and then some of the mistakes that I've made. Also, I wanted to mention, again, this is not financial advice. This is me just sharing what I am doing. And also, I wanted to disclose that I have been following the Great Mattsby. So you can find the link to his profile on X below. I have been following his strategy and his insights. He is great, someone that I've really connected with in terms of his style of technical analysis and trading. So this isn't day trading per se. It's more of a momentum style of trading, and it's worked well with my schedule. And I would recommend that if you are following along in school, or you don't want to necessarily day trade. If you don't have time for that, then the Great Mattsby has a strategy that I've been following that is a little bit more accommodating to various schedules, and it's sort of less stressful than trading in and out. So I would highly recommend you watch some of his content. Okay, so in terms of stocks that have done well, so again, I invested in Tesla in sort of April or so, and my cost basis is 244, and the stock has run up and done quite well. So we're up 30% in that position, and I was able to get 10% in for that stock. Some other stocks that are doing well, EOS, I started getting into that recently, and that's done well. And I actually closed that position because I feel that it might retrace a little bit. So we made some good gains there in July. That'll come up. BABA, I've got a 4% position there, and it's actually falling a little bit, but it's in a good support zone. So maybe we'll check that chart as well. I want to talk about HIMS and some other stocks. Coin. So I made a video about Coin saying that the 244 was a good range, and it's gone all the way up to 350. So that's one of our best positions there. 83% gain with our 10% in, and then Hood has done really well as well. So a lot of my focus has been on crypto related stocks, following the momentum, with Bitcoin making all-time highs. Some of the stocks related to Bitcoin, like, Coin is going to do well when the alt season sort of kicks in, and that potentially is front running the altcoin season with this big move up with Coin. And then I have invested in the Bitcoin miners as well. So these are more speculative stocks, very volatile, but we can see some of the gains in these Bitcoin miners. Some of them are up 10%, almost 30%, 65%, 50%, and then iron has gone up from $6 to $14 and even higher now into July. So basically, if we look at the charts here and we just look at the IWM, so the IWM, it's an ETF for the Russell 2000. It's the Russell 2000 ETF. Basically, it tracks a collection of like 2,000 small cap stocks. So small cap stocks are companies where their market capitalization is in the few $100 million to maybe $2 billion. So these aren't big tech companies. They're smaller companies, and they're much more volatile, and they're sensitive to various economic shifts, and they're sort of more of a risk on. So if you ever hear people talking about, risk on assets are coming into play, it's related to some of these small caps. And we can see here with the IWM chart, we've got the low in April, and now it's really making great gains. And the last few weeks, it's had a 3% week and then another 3% week. And if we can get IWM to this 786 fib and start building a little base there, then generally that's a sign that if things can get to the 786 and above, they'll go into all-time high. So when the IWM is going well, then more speculative stocks, it signals that investor confidence in riskier assets is coming, and this is why a lot of those Bitcoin miners are potentially going to rise even higher. So I would imagine that if we can build, get to the 786, move up to the 886, and these fib levels are sort of like the golden ratio. So if things could get past this section, they tend to go into all-time highs. If that happens, then more speculative stocks like the Bitcoin miners that we are invested in, they're going to go up even higher. So if we kind of just look at a few of the Bitcoin miners, we can see why I got in, or why the strategy allowed me to get in, and what's going on with some of them. So this first one is just CLSK, and they all sort of have this same pattern. Even iron that we got in, if we put on the Ichimoku cloud, we can see that since basically the end of 2024, it's been below the blue line of the Ichimoku cloud. So that's the conversion line. So when things are below that, it's generally a bearish sign. We can see the market structure here. We're getting lower highs and lower lows all the way down till it sort of bottom out here at the 0.50 fib here. So I entered a position here, I think around $6, and we can see we've got a few bullish engulfing candles, and now we're getting above the conversion line, and we're breaking through some levels. And CLSK, the Bitcoin miner, the same thing. We've got weeks since the end of 2024 below this conversion line. Then we've got a bullish engulfing candle breaking through resistance zones, so breaking through the conversion line, breaking through this fib, and then the breakout back test is what the strategy that I'm using calls for. We don't want to buy any of the breakouts. We want to buy the breakout and the back test. So, entry right around $8 would have been good here. And then this week we did another back test of the conversion line, and we're back testing this fib level in the $8. So this whole zone would have been a good support zone. And then we've got a bullish engulfing candle here, 18%, and then another one running up to resistance here. So all the Bitcoin miners sort of follow this trend, and right around this zone is where the trend change is where I got in some of these breakout back tests, and that's sort of where I made my initial positions. And now many of these are going to look like they're going to rise up even higher. Again, this is not financial advice, but potentially many of them are going to reclaim all-time highs if Bitcoin keeps going up, and if the IWM keeps going up, then these speculative stocks are going to continue to rise. Now, they are very, very volatile. So, some of the swings here, BitDeer, this is another one where, we were up to the $14 range and we dropped back down to a fib level. So we can kind of see here, we had a breakout into the one level of this fib, and then we did a back test almost to the 786 again, and then we broke back up. So, very volatile. We're going from $14 almost down to 10. So that's, if we look at the percentage gain here, we're talking, almost 30%. So part of this strategy requires you to sort of embrace the volatility with some of these stocks. So I could have sold at resistance and rebought at support, but with my schedule, I'm just not able to look at all these charts attentively with enough dedication every day. So I could set limits to sell, but I found that trading in and out hasn't been as effective for me and my schedule, as opposed to just buying at support and riding the volatility. So you buy here, it rides the volatility up, and you're losing some of your gains, but that's just the flow and the nature of some of these volatile stocks. Are going to go up and down, but they're going to, some of that important back testing is needed for the stocks to get even bullish and continue to break out. So it can be hard to hold on to these, but if you embrace the volatility and just keep accumulating at support zones and on bullish charts, that is really the main focus of this strategy. So we saw that with Coinbase here. If we look at the Coinbase chart, here we're on log scale. Basically, I made some entries right around my cost basis for my 10% is right around 191. So we had a bullish engulfing candle here at the low. We had a 15% candle. So we wouldn't want to potentially chase this candle. We want to wait for a back test. And we've got another bullish engulfing candle through multiple resistance zones. We've got through the cloud, through the conversion line, through this fib, and then we don't want to buy this, but when it back tests a support level, this is where we made some entries. So I think I made some entries in the 170s and then more entries in the 190s near 200. And this is my cost basis. So this is the areas that you want to buy for this strategy. You don't buy the breakout, but you buy the back test of the support level. Then we've got another bullish engulfing candle. And again, you don't chase the breakout. We buy the back test. So, this rode up to 270. You don't want to buy it at the highs here necessarily. You wait for a back test into this 245 zone. And I made a video about how this is a great accumulation zone. Several weeks showing the 786 as support, and then boom, we've got another bullish engulfing candle, another big candle, and we're up 30% and 15%. So in terms of allocating more to coin, if I did have more funds, we're sort of in a range here. If we put on the linear fibs level, we can see that we broke out almost to the 886, the 380 zone. Resistance had to come back and back test this 345 zone. So perhaps in the coming weeks, if we can maintain 345, that could be the new accumulation zone, the new support zone until the next leg up higher. So again, I'm already 10% invested here, but if I had additional funds, then this zone could be a good sort of support zone. So for the strategy, it's basically breakout, backtest, buying, accumulating shares in bullish charts at these support zones, never chasing, never buying resistance, and accumulating on the way up. Now, some support zones don't hold, so the entries are 1% to 3% of your fund. So if you buy some support and it retraces to further support, you can dollar cost average on the way down as well, as long as the high time frame market structure is bullish. You can continue to buy at support zones, and that's how you get your cost basis low. That's how you accumulate more shares in bullish charts. So that's basically what this strategy entails. And the indicators that we're using, the Ichimoku cloud, fib levels are working well on linear scale and on log scale, sort of fine confluence with those. And then also the Gann square. So basically Tesla, if we look at Tesla, we can see that if we take off some of these indicators and we just put on a Gann square, we can see that this is the zone that I bought a 10% position when I started the fund. I started trading back in April. So I basically got in pretty quick with my 10% because this is just a big support zone. We've got an angle and an arc from this Gann square. And we've got the Ichimoku cloud, I believe, had some support there, and we had some moving averages there as well. So we've had the 100-week moving average, the 200-week moving average. So a lot of confluence that this was a good support zone, and it held and it continued to ride up. And now it's reaching resistance on this Gann arc here. So if we zoom out, we can see that some stocks really follow market symmetry well with these Gann squares. And we had a video where we drew this out in our YouTube channel. And basically from the inception here, we've got a Gann square, and you can see that Tesla follows this market symmetry really well. And these lines are basically good support and resistance zones. These levels, these angles, and these arcs offer zones of resistance and support. So we can see Tesla ran up and got rejected at this horizontal level, did a breakout and a back test, and then continued on, and then it ran right up to the next level, this next blue level right here, and rejected perfectly, had to do a back test of this angle, and then finally broke through. And then what do we see here in the present day? It's come and it's sort of wedged in between this arc and this angle, and seeing it as a bit of support, flipped to resistance, lost it and came back up basically perfectly as resistance right here on this arc. Resistance, couldn't break through, so had to backtest another support level, came right back down to this angle, back up to this arc as resistance, back up to support on this angle, and then it broke through and reached perfectly on this next level. So you can see that Tesla is following the market symmetry of these Gann squares very well. And then as you add other indicators like moving averages or the Ichimoku cloud, you can find some good confluence that certain zones are resistant. So this is clearly a good support zone. And then this, the 350, 360 range, is clearly a good resistance zone. So this is an area where, if Tesla can't break through many weeks in a row, then it's going to come back to some other support areas. And then if we also throw on some fibs, we can see that it came back down here almost perfectly to the 272 zone, the 702 fib. And then if we change to linear scale, we can see here that we're getting right now, hopefully maintaining this 702 on linear scale, the 321 zone. So now this potentially is going to be the new support zone moving forward until it breaks through and continues to make some new all-time highs. So there's just a quick breakdown of the tools that this strategy uses, why I entered in Tesla, why we entered in coin, and why we've got a good position in these Bitcoin miners as well. Many of them showed trend change with the Ichimoku cloud, and now the IWM is going higher. Therefore, some of these miners I think are going to continue to go higher as well. So some mistakes that I made, if we look at the HIMS chart, and I'll just quickly go over this before we wrap this video up. We can see on log scale here, I was in HIMS right around here. So this is a clear, good support zone. If we kind of look at where we are here, the $25 range was a good support zone. It's a fib level. There's the 50-week moving average there. And then if we take everything off, there's also the Gann square is right in that zone as well. So there's three areas of confluence that this is a good support zone. And I had a small position there, but I fell for a mistake that many beginners do. I saw some post, I think on X, or someone mentioning that, they didn't think HIMS was looking good and they got out. And I thought, you know what, I don't have a large position. Maybe I'm just going to get into something else. And I decided to sell here, not based on the chart, just based on a news narrative or a piece of information that you see. And what happened after, HIMS, broke out big. We got a 45% week, a 27% week, and so on. So big mistake in hindsight, listening to a news narrative instead of just focusing on the charts. This was a big, strong support zone. It should be accumulating here. Very volatile stock, but it support held and it went up higher. Now, what I did do that was good is I didn't chase. You don't want to buy these breakouts because you are basically left with a higher probability that you might retrace down. So it's riskier to buy the breakouts. We want to buy a back test. So here, HIMS ran up to this scan level perfectly as resistance in the $63 zone here. Week after week, couldn't break that. Therefore, it's probably going to retest and do a back test. I think there's a fib level there. Exactly. Yeah, the $64 fib level is also there. So a lot of confluence that this is resistance. You don't want to buy at the all-time highs. You want to wait for a back test. And certainly one happens and bad news came out and dropped the stock. So the chart was telling us that this is resistance. It's going to come out. It's going to retrace. And then some bad news came out and the stock fell. So it fell to this fib level and I made another entry here in the low sort of $40 range. So certainly missed out there as a bad mistake, but I didn't chase. I didn't buy resistance. I bought the back test. And now we have another position in HIMS, I think where our cost basis is in the low 40s there. So that's sort of a mistake I made, but I recovered with some good discipline with the strategy. And another mistake I made that I'll highlight is this chart Oscar. I had a position and I sort of got in too early. So with this strategy, we're allocating 10%, but we only want to accumulate in 1 to 3% buys in support zones. And I sort of bought in too much. So if you put too much money into a stock too early, then sometimes it pays off like it did with Tesla and Coin. But sometimes, support levels don't always hold and they might retrace a bit. So if your cost basis is, $15, $16, and it retraces down to 13, and you're fully invested with your 10%, you don't have the opportunity to buy some of these lower support zones and bring down your cost basis. So I sort of did that with Oscar. I went in too quick, too early. And then it came up to this resistance zone in the 16s. And I thought, actually, I saw someone saying that they sold here and they made a good trade. And I thought, you know what, I'll do the same. And I don't know why I did that, but I did. And I sold here in the 16s. And, in hindsight, obviously it was a bad decision, but then it broke out. But again, I didn't chase. It broke out to the 21, 23. So big gains there, but breakout, back test, and I re-entered back here in the $16 range again. So again, part of the strategy is buying the back tests after these breakouts and the volatility. You either sell at resistance and buy back into support. But when you trade in and out a little too much, you might miss out on some of these. And if you sell at resistance and it breaks through, then you're sort of left chasing or having to wait. So I've kind of learned to just ride the volatility up. And although you've got a big gains here and they're sort of wiped out by the fall back to the support, many charts just need to do this. They need to break out. They need to backtest several times in order to get more bullish and continue to go higher. It's just the way the stocks go. If we again look at Coin, it's a perfect example. Every stock, it breaks out, back tests, breaks out, back tests, breaks out, back tests. So you want to buy the back tests at support and then continue to accumulate bullish charts. And you don't necessarily want to get all your buys in at one area because that's generally riskier. It's not good risk management. But if you bought support, sure, your dollar cost averaging, your average cost basis is higher than it would be if you just bought here, but it's just less risky. And I think over time, investing in more charts and doing this on a longer time scale, this is the less risky approach. And I think over time is going to potentially make you more money with this strategy. So there are some good positions that I have. I hope that you found this useful. It ran on a little bit here, but the fund is doing well. We're up 40% after 3 months. And again, our Skool Group, you can come here in the trading section. You can watch and see some analysis of my trades in more real time. And if you're not following this strategy, you're doing something else. We have a lot of members now who are basically being accountable to the group. They're learning. Some of them are starting from scratch as pure beginners. They're going through some of the material. They're maybe even doing other strategies, not the one that I'm particularly doing, but they're making posts here, staying accountable, staying consistent to the group. It's going to help you learn more, help you stay consistent and continue to learn, trade, and over time, you're going to eventually start trading real money, hopefully, and making some good trades and so on. So a big part of my journey has been being consistent with this group and just posting my progress as I learned. I had to go through a lot of material over the first year or so, and that's been very helpful. And a lot of beginners are doing that in our group as well. So I would encourage you to check that out if you haven't. So thanks so much for watching, and I look forward to doing the next monthly update in July. Take care.